The first quarter of 2022 was probably the slowest economic growth that we've seen since those really deep declines during the pandemic. And that's a result of just ongoing supply chain disruptions, higher interest rates. We're talking about higher inflation. We're also talking about that lack of fiscal stimulus in the economy. All of these things will continue to challenge economic growth. And the one thing that changed in the first quarter is that it is pretty clear to us through some of the Federal Reserve rhetoric that they will sacrifice economic growth in the near term in order to try and get ahead of inflation. And what you can see in this chart is that the economic environment through the remainder of this year is going to be much slower than we've been accustomed to coming out of the pandemic. Now, with all of the challenges that we've faced in the first quarter that are going to continue through the rest of this year, we do think that the recession risks are rising. But yet we don't see a recession imminent in the U.S. for several different reasons. First of all, when you look at the manufacturing sector is still firing on all cylinders, trying to keep up with the supply chain disruptions, trying to catch up to that pent-up demand. We're seeing production, new orders in manufacturing. These are all in very high expansion territory levels. So manufacturing is supportive. When you look at the interest rate environment, yes, absolutely, the Fed's going to be raising interest rates, and they should be raising interest rates. But when you look at the real level of rates, if you look at the real level of 10-year Treasury yields, they're still deeply negative. They're not necessarily tight like we've seen historically that has led to recessions. When you look at the supply chain, it has been a significant drag on economic growth, and we are far from repairing this supply chain, but we're starting to see some green shoots arise in the supply chain. We're seeing the backlog of orders start to come down. We're seeing inventories increase, and we're starting to see some small improvements in that port congestion that we talked about coming into this year. One of the other things that's a little bit unique in this economic cycle is we are actually in the beginning stages of the labor market repairing itself. As you can see in this chart, we're starting to see Americans come back to work. The labor force participation rate is ticking higher. Why is that? We're starting to see a correlation between the decline in the savings rate as well as higher energy costs, higher food costs, with a better participation in the labor force. It's broad-based across age ranges, but also we're starting to see some retirees come back to the labor force. This should help with the consumer balance sheet. Now, we are not complacent either. As mentioned, we realize that the economic environment is going to be challenged this year. We just don't see that a recession is imminent. We will continue to monitor all of these things that are mentioned and many other factors like consumer balance sheets, consumer confidence, to see if it does get us a little bit more concerned about the end of this economic cycle. But at this point, we think this cycle still has some fuel left in the fire.